Welcome back, WSU Vancouver VITA volunteers. This week we are going to continue talking about credits. If you remember last week we talked about the standard deduction and tax computation, and then we started with credits with the credit for child and dependent care expenses, the child tax credit, and the credit for other dependents. And this week we're going to start talking about education credits. Now there are two types of credits for education. There's the American Opportunity Credit and the Lifetime Learning Credit. And just so you kind of get the symbols there on the slide, the 4 is because the American Opportunity Credit can be taken for 4 years for the first 4 years of post-secondary education, and the Lifetime Learning Credit can be taken for as many years and for more than just the first 4 years of post-secondary education. So I put the little infinity symbol there just so we can remember the difference. One is limited to 4 and the other is somewhat unlimited. Let's look at the forms as we like to do. So here we have our intake form, Form 13614C. In Part 4, again, this is our expenses part. Question 3 is college or post-secondary educational expenses for yourself, your spouse, or dependents. So there, if they have that little box checked, we're going to be thinking, maybe this person is going to be taking education credits. And then there's also an informational form that our taxpayers will most likely be bringing in. It's this Form 1098T for tuition, and that would be given to them by their educational institution. Then we look at how that information will flow onto our return. It flows onto this Form 8863, which is for our education credits, American Opportunity and Lifetime Learning, both of them. And you'll notice it has a couple of parts. It has the part that's for the refundable American Opportunity Credit and the non-refundable education credits. And if you remember, non-refundable credits reduce tax down to 0, but no further. And refundable credits can reduce the tax to 0 and beyond. And then credits like the American Opportunity Credit are kind of hybrid, so they are partially refundable and partially non-refundable. So you'll notice that Part 1 says refundable American Opportunity Credit, so the refundable portion is going to flow through that part of the form, and then the non-refundable portion flows through with the other Lifetime Learning Credit, which is not refundable. After Form 8863 goes through some calculations and asks some qualifying questions, then the credit amount flows onto Schedule 3, line 3. There's education credits from Form 8863, line 19. But that's actually just the non-refundable portion. So if our taxpayers also had a refundable portion of that American Opportunity Credit, that one actually flows directly onto the Form 1040, page 2. You'll see there we have page 2, and line 20 is the amount that carries from the Schedule 3. That's the non-refundable portion of the education credits. And then later down on page 2 of the 1040, we have line 29, which is just that refundable portion of the American Opportunity Credit. We're going to go through some of the requirements in order for our taxpayers to be able to claim these education credits. So we're going to begin with the requirement that the student has to be enrolled in an eligible institution. So what is an eligible institution? Well, generally any accredited public, nonprofit, private, college, university, vocational school, or other post-secondary institution is going to be an eligible institution. They must be eligible to participate in a student aid program administered by the U.S. Department of Education. And there's a tool online, you'll see the link there, where you can look up the institution to see that it was eligible. And if our taxpayers are getting Form 1098-T, their institution was eligible. Now, a real kind of quick note about the American Opportunity Credit. Notice that we abbreviate it to AOC quite a bit. It does require an employer identification number of the institution. So that's something that our clients who are claiming AOC are definitely going to need that EIN. Usually it's just on the 1098-T is where you would get it from. So after we determined that our client, the student that they're claiming this credit for or wishing to claim this credit for, they were at an eligible institution, let's talk about some qualifying expenses. What are the expenses that count towards this credit? So it's going to be tuition and certain related expenses that are required for enrollment or attendance at an eligible institution. Educational institution. So this includes required student activity fees, athletic fees, and etc. Things that our students have no choice. The institution just charges them as part of their being enrolled at that institution. So parking is not one of those things, but those student activity fees that you don't get to choose not to take part in, those do count towards this credit. Now, there are some differences between the American Opportunity Credit and the Lifetime Learning Credit. American Opportunity Credit includes books and supplies, even if they were purchased somewhere else. So, you know, if our student purchased them online or bought them from another student, they can still count those as qualifying expenses for the purposes of the American Opportunity Credit. And those are expenses that would not show up on the 1098-T. They can be added in as the return is being prepared. The Lifetime Learning Credit, on the other hand, the books and supplies have to be purchased through the institution. So those of our taxpayers who are claiming the Lifetime Learning Credit, if they bought their books online, not through the institution, then they don't get to add those into their as a qualifying expense. Qualifying expenses also include payments that are prepaid for the academic period that begins in the first 3 months of the next calendar year. So this is really applicable for our students who are on the quarter system, for instance, like students at Clark College, where they would be paying for their winter term before the end of the year. And so even though the winter term doesn't start until the next year, that academic period is in the first 3 months, and so they are able to claim those payments when they make them, if they make them before the end of the year. Qualifying expenses do not include room and board, insurance, medical expenses, including student health fees, transportation costs, again, parking is part of that, other similar personal living or family expenses, and any course of instruction or other education that involves sports, games, or hobbies, unless the course is part of the student's degree program. Or for the Lifetime Learning Credit, it helps the student to acquire or improve job skills. So think of like your community education. If it's not leading to a degree, or if it's not improving job skills, those classes do not count as qualifying expenses for our education credits. So now that we talked about the kinds of expenses some of our students have had and whether or not they can be used towards this calculation, we need to talk about amounts that they paid towards their education, but they paid those amounts with certain funding sources. So if they paid for these educational expenses with things like tax-free Pell Grants or tax-free employer-provided educational assistance, veterans educational assistance, tax-free parts of scholarships and fellowships, distributions from 529 plans or other qualified education plans, or if they were monies that they paid out that were eventually refunded, those kinds of expenses that were paid with those kinds of funds cannot be included in the calculation towards their qualifying educational expenses. So I like to think of it, if it was paid for by tax-free funds or it was later refunded, they don't get to count those expenses as qualified educational expenses. The only exception would be if they received a gift or an inheritance. So for instance, if their grandma gave them some money and they paid that towards their education, they could still count that. It was a gift. Now there's an exception here. Some students choose to pay non-qualifying expenses with their scholarship or Pell Grant funds. And doing this makes those scholarship and grant funds taxable. So, and then even if the student didn't directly make those payments, if the scholarship or grant funds were paid directly to the school for room and board or non-qualifying expenses, those funds will be taxable. In that case, then for our student, if they're reporting that on their return as income, and the stipulations of that scholarship or grant say that it must be applied to expenses like room and board other than qualified educational expenses, or if it may be applied to those expenses like room and board that are not qualifying education expenses, our students don't have to reduce their expenses by those grants or scholarships. And then our special exception just for 2021 is that those higher education emergency financial aid grants that some students have been able to get, they are not taxable to the student and they do not reduce the student's qualified educational expenses. Now that we've covered what is an eligible institution and what kinds of expenses are qualified, let's talk about who can claim these credits. So taxpayers can claim these credits if they are the student or the spouse, if they claim the student on their return. The taxpayer cannot be claimed by somebody else, so they must not themselves be a dependent. No married filing separately, and they cannot be a non-resident alien, and they're going to need to have an adjusted gross income within certain limits. So if those things are true about the taxpayer, then they can claim the credit for a student who was enrolled at or attended an eligible post-secondary institution during the year. So if that taxpayer is not the student, but they claim the student as a dependent, all of the qualified educational expenses of the student are treated as being paid by the taxpayer. So, you know, if we have a situation where taxpayers are claiming their student child and the student child made some contributions towards their educational expenses, then it's the parent who is claiming the child who gets to claim the credit. And then just a special note, again, with our American Opportunity Credit, it's going to require an ATIN, an ITIN, or a Social Security number for the taxpayer and the student. So now that we talked about some basic requirements We talked about what an eligible institution is and what are qualifying expenses and who qualifies to take these credits. Let's do a little credit comparison between our American Opportunity Credit and our Lifetime Learning Credit. So our American Opportunity Credit, remember again, it's good for 4 years of the first 4 years of post-secondary education. So we're thinking like bachelor's degree. And it can be up to $2,500 per student. So if you have more than one student on the return that qualifies for this credit, you can have more than one of this credit happening on a single return. And it's calculated at 100% of the first $2,000 in expenses and 25% of the second $2,000, which is $500. And so $2,000 plus our $500, that's how we get our $2,500 in credit. And as we talked about when we were looking at the forms, this credit is partially refundable. So 40% of it is refundable. So even if our taxpayers don't owe any tax, they might still get some back. Our Lifetime Learning Credit is not limited to years of education, and it's also good for our students who maybe are no longer in their bachelor's program. They might be on a 5th year of education, or they might be master's graduate students, or they might be just going back to school to get some job skills. They're still going to be able to claim this credit, even though they wouldn't be able to claim the American Opportunity Credit. And for the Lifetime Learning Credit, they can get up to $2,000, but that's per return. So unlike the American Opportunity Credit, where you could multiply it if you had more than one student, if you have more than one student trying to claim the Lifetime Learning Credit, the whole return gets $2,000 and no more. And it's calculated as 20% of up to $10,000 in expenses. And this credit is non-refundable, meaning that once we've reduced tax down to 0, if there was credit left over, we don't get to claim the leftover credit. It's just gone. Continuing on with our comparison, again, as we talked about before, American Opportunity Credit, first 4 years of education, claimed for only 4 years. And the student needs to be in a program that leads to a degree, a certificate, or other credential. They have to be a student at least half-time, and the student cannot have had a felony drug conviction. The Lifetime Learning Credit, on the other hand, is available for all years of education, and it includes courses to acquire or improve job skills. And this can include students who are not pursuing a degree. Let's talk about taking multiple education benefits. As we talked about before, if we have more than one student who qualifies for the American Opportunity Credit, you might be able to see more than one American Opportunity Credit being claimed. You might have one student claiming American Opportunity Credit, another claiming the Lifetime Learning Credit. Those combinations are okay. However, you cannot take both the American Opportunity Credit and the Lifetime Learning Credit for the same student in the same year. You also can't use expenses that were taken as deductions on Schedule C, which is our business income. So that's, our little sole proprietorships. I don't see this being a big issue for us. Our basic return volunteers are not going to be doing Schedule Cs, and even if our advanced Schedule C advanced volunteers that are able to do some Schedule Cs, the type of Schedule Cs that we see are maybe not typically the ones that people would be able to qualify to take education deductions for. We might mostly see our Uber drivers and Postmates and those kind of smaller Schedule Cs that don't really require an education for their business. You also can't use expenses that reduced the taxable portion of scholarships, fellowships, grants, distributions from educational savings accounts. Again, you know, if the funds for those expenses were if the expenses were paid for by tax-free funds, then we're not going to get an educational benefit on the credit side as well. There's just no double dipping. So then if we can't take multiple benefits for the same student in the same year, we need to start thinking about, well, what is the best benefit for our particular student? Should they take the American Opportunity Credit, or should they take the Lifetime Learning Credit? So in thinking about this, you're going to be reviewing that student criteria. Remember, American Opportunity Credit has some limitations, you know, such as what year they're in their education. Again, the felony drug conviction, students would not be able to take the American Opportunity Credit. So if they fall out of the criteria for the American Opportunity Credit, then kind of the next step is to look at, well, do they qualify for the Lifetime Learning Credit? Another thing that you'll want to be reviewing is the types of expenses. So for instance, if we have a student who would qualify for either of those credits, remember that the Lifetime Learning Credit doesn't allow our student to include books paid to outside organizations, or you know, books that were paid for outside of the institution. So that student might get a better deal if they claimed the American Opportunity Credit, because more of their expenses would qualify. And then what you're going to do is you're going to enter things into the education credit screen of TaxSlayer, and then there's a toggle button there that helps you choose between credits. And this is really helpful because there are some income limitations to which credits our students might be able to claim. And so if you're unsure of where the best benefit is going to be, you can toggle and then go preview the return, and toggle back to the other one and preview the return and see where the best benefit is. So now that we discussed our education credits, our American Opportunity Credit, which is good for 4 years and no more, and our Lifetime Learning Credit, which can be used again and again, and we talked about what a qualifying institution is, and what expenses qualify, and what kinds of taxpayers qualify. And we talked a little bit about choosing the best benefit for our taxpayers. Here's what I want you to do. Head on over to Lincoln Learn and answer the skills check questions. There's just 3 of them. And then for TaxSlayer practice, we do have some education expenses for one of our returns, so you'll want to enter those into the appropriate practice return. And as always, publication 4012 is our reference manual. Publication 4491 is the lesson material where all the information that is in the slideshow comes from. Those are always available to you, even when you're taking the open book exams to certify. You're welcome to look at those. So we're finished now with education credits, and we're going to be moving on next to miscellaneous credits.